All right, guys. So I'm getting ready to head out. Gotta turn the TV off. It's like, I think it's like 8 or 9. I'm going to a meeting. There's a tech company meeting with the owner. We're going to make an investment. Well, hopefully. This is what I wear to my investment meetings. Y'all can see. Just gonna go have a quick dinner. Talk to this company. We've already met with them a few times, so I'm gonna try to take it with you. I'm gonna see what they feel about camera, and two, if I can. I don't like to disclose too much because, again, I'm trying to buy a company. I think that'd be something cool to share with you guys. I don't think a lot of you guys are familiar with what I do. You know, this is my investing stuff. Obviously, it's not. Oh, I need a Red Bull. This isn't, you know, stocks, but it's equity. You know, this is private equity. I'm in my fridge. I don't know. See the bright light fridge, but yeah, so I think it'll be cool to share with you. If you're new to the channel, you might be like, why is this on your chest? This is my version of vlogging. Go see my other videos if you don't understand why I'm like this. But yeah, so we'll talk about this. I'll let you guys know how it goes. If not, if anything, I want to talk about private equity, and I think that's what we'll make this video about. Love y'all. All right, that's a killer view from the Bel Air market. But I was bumping a song, I was really vibing to it, and I remembered I didn't get to finish that video on private equity for you guys. So let us talk about that. I planned on sitting down and doing it, but I've just been really busy. I can't even turn it around and you guys are gonna see me wearing the same clothes. I don't want you to judge me too hard, even though I got a lot of people out there who love to judge, which is why I have to give this disclaimer that the view is going to be of the LA scenery and my beautiful trip I take. Going to someone's house right now. It's a beautiful drive. I think you guys will enjoy it. I do not show my face. Go watch my other YouTube videos. But yeah, so to the point, let's talk. I think I'm gonna make this about stocks and private equity, or really the differences and similarities, and just briefly discuss upon it, because I think a lot of people are unfamiliar with how it works, how it operates, and then some of the coolest parts about it is that it can give you insight into the stock market, and you guys see, you know, maybe give you guys some ideas of where you want to go with your investing career, what you want to do with your money, get involved in finance in other ways, and it's stuff that we see every day. So, you know, it's even on IPOs. That's the big thing. I'm sure a lot of you guys have seen IPOs. IPO comes out, you know, it's like Snapchat. It IPOs comes out at this price, even if it drops, you know, from where it peaked or where it opened at. You know, the news is like, oh, Snapchat still IPO'd up 50%. Snapchat investors, you know, that one school that invested in Snapchat, and then by the time it IPO, they made some crazy amount. That was because they got it at the private equity stage. So when you buy a stock, that is the stock market, you know, that's public equity. It's publicly traded. They have to disclose their numbers. That's the filings you guys see. You know, they have to disclose everything. Just the reason even why Elon Musk got shitted on with the SEC, because he has a publicly traded company. When it's an investment that's solicited to anybody in the public, regardless of who they are, anybody could go and buy it. There has to be certain regulations, and they have to do stuff because, well, there's a burden raising money from the public and the benefit that you could get a lot. So private equity is exactly what the stock market is, but now instead of having a stock exchange or some big open, you know, area you could go to purchase companies, that doesn't exist, and it's not regulated. There's no, you know, when you do a private equity deal, obviously there are certain regulations, like, you know, investors, you know, if someone tries to defraud you and stuff like that, but it's more of the burden on you. It's easier for someone to defraud you in private equity than public equity, and that's because of the dynamic of it and how it works. But pretty much what you do, there's private companies out there that aren't necessarily public. Well, they're not on the stock market, but they're like brand new startups. Some people do private equity startups. I don't. We try to go for stuff like, you know, those meetings that I go to. We go to people with, if they have intellectual property, trademarks, patents, stuff like that that we can monetize. If they have no revenue, I will consider it. Or we do stuff that's already making revenue, so pre-revenue, and that means, you know, a company that literally it just hasn't made any money yet. There's not even revenue, there's no profit, there's just no generated business. And that's what a lot of you guys, you know, I've had people reach out to me, I just love this view. How do you guys, I'm telling you, that'll get you motivated. But you know, a lot of people hit me up on YouTube, Instagram, all this, and they're like, hey, Josh, will you invest in my idea? I'll give you, you know, this is my company. And some people have cool ideas, but you know, it saddens me when I'm like, dude, I can't help you. It's pre-revenue, I don't do that. You know, a lot of investors won't do that. You know, even go think Shark Tank. Shark Tank is in a sense a view into private equity. And that's actually a great way to look at it, because you see the companies on Shark Tank. Some of them are new, and then it goes back to this point where the ideal candidate for private equity is a company that has already done stuff, you already know about it, or it's doing good, it has a market share, something going for it, they're making money, and then what happens, they need money. They're trying to raise capital, raise investors, and they're willing to offer a private round, meaning it's only offered to a select group of people. You gotta be accredited, and they'll sell off their equity. So that's how, you know, Snapchat, all these IPOs you could think of when these people get in early, that's how Uber, you know, it starts in different, you know, there's pipelines, like here even in LA, like that's why, like I'll meet with people, and you know, a lot of people are into investing in industries, a lot of people have companies, and you hear about it, and that's how I've gotten deals. Like I've gotten access to invest into some companies where, you know, what people like, that my investor pool that I'm investing with, it's kind of crazy. Some of the other investors, I'm like, how the fuck am I in it on them? And it's just personal relations. So it's a private one. There's not, you have to offer it to everybody. So what happens, they raise money and they take your money just like a stock, and they go and operate their business model, make more money. As they make more money, they become more valuable, and then you still own your investment. That equity position increases. They might give you a return, but usually not. And then by the time the exit plan is, either by the time it gets to equity, or we'll do even convertible debt, or sometimes we'll give them that and it'll turn into a smaller portion of equity down the line, or we could even structure it as loans. There's just many things you could do, but the whole idea is why people invest in them, and what is like the appeal is to get into these companies where it's like investing in friends and family, but on a bigger level, whereas you could find companies that are doing well at this, they've already done great, they need to grow a little bit more, and they need capital to scale and do that, or maybe even expertise. And that's where some people bring us on board. You know, I haven't really shared it, you guys see I do a lot of stuff business wise, but we have a pretty good international connects in some Asian countries. So that's why people will bring us on board, and they'll let us invest, because we could give them a market and access that they couldn't necessarily get on their own. But these are the companies where they do good, and then you're pretty much getting to invest before they go public, or before they reach that spot where everybody kind of wants their hand in it. So, and every company really goes through this stage most of the time. Like that's the beauty of it, is that, you know, I've seen companies like, again, Snapchat, Uber, you'll miss those in private equity, but there's opportunity to get them publicly. So most companies go through this stage where they need to raise money, and this is the process, and eventually they'll raise money, then they profit so much, then they'll go public, and then again, that's where you get to cash out and make all the money. But that, my friends, is private equity. So you know, that's how you see it on the stock market, and when these companies IPO, that's how they make so much money, and that's how these investors make so much money. Like that guy, the Twitter guy, I forgot his name, he's criticized Twitter, but he, you know, he invested in Uber, Twitter, and all these way back in the day, just private equity. You make a couple of those good investments, it's great. Now, the risk with private equity, and this is something I think I really need to address, because stocks, you guys see the public information on stocks, you guys could look over them. Is that like that two planes, or is that just a big plane, or am I blind? I think I'm just blind. But essentially, what's gonna happen, like stocks, you know, it's very difficult, I guess not very difficult, but for the most part, for a blue chip or a publicly traded company to really fail and do bad and not work. Now, private equity, it's just, dude, you're reading something, and you're reading their filings, you're reading what they're saying, you're talking to people. If you would agree to invest, you agree to invest. Pretty much there's a bigger likelihood that you're going to lose money. So like, why would anybody even be interested in private equity at all, is simply, man, oh, is this guy really trying to read? Man, watch it, he's gonna just go super. Okay, so we're talking the risks of private equity, and versus, like I said, you could invest in a publicly traded company, there's checks, backstops, and it's gonna be more established. That's why it's gone public and had that ability to raise so much. But now, a private equity, how it works, most private equity, I think 90% of them fail. So I've lost a lot of money on them, but that's the best part about it. the reason why people do it is because the one that hits generates enormous returns, you know, like 10, 15, 20 times money, even crazier. And that's what they go for. You know, if we have a fund, if we want to allocate, you know, $10 million, we could put 100 grand into like 100 different companies and just go from there. And, you know, we're not 100, you know, 100 grand is a good amount for a lot of smaller companies. It's a decent amount, get a decent position. Or if we wanted to do $1 million in 10, but you know, $1 million isn't a lot of money when it comes to real estate and stuff, but even in investing, it's not really that much money, but depending on the stage and growth of the company, man, you could do a lot with that, you know, and with that, where they can, and you could get a pretty decent sized position. So that's always very, very cool. But that's the thing. So it's a lot riskier. So if you guys want to do this, it's going to require more fundamental analysis, more understanding, you know, valuations, and that's a lot of it's valuations. And a lot of times in private equity, like you hear Uber and that, companies get really disjointed from their valuations, in the sense that valuations get really high, especially as demand and growth comes in and people start expecting more and more. So you gotta watch out for that. But if you guys want to get into that, you know, that's stuff you could learn through, you know, accounting, business school, anything of that nature. You guys could get into it and go from there. But it's really along the same lines as the stock market. It's kind of just a different branch, a different focus. And, you know, if you play your cards right, it could be very profitable. It's very exciting. It's the same thing as the stock market, but instead of publicly traded companies, you're finding private ones. And, you know, that's the fun part about our business. You know, me and my partners, you know, we have guys going out there, meeting people, you talk with people, then you get the filings, you get to read reports, you get to see cool new technologies. It's a whole process. It's a business, and it's exciting, and there's a lot of money to be made, but it's definitely a lot of work. And, you know, I guess the barrier to entry, you know, you guys either have to climb up the ladder working through funds and get into finance to do that, or you got to get placed with investors, become an investor yourself, and you can start your own fund. It's not that crazy. You know, if you guys really wanted to start your own fund right here, right now, go find a friend, and you better make sure it's a good fucking idea. Let's say you really have a guy, he's like, yeah, he has a great idea, it's this and that. You could invest and do that. That's how a lot of VC funds, well, not the VC funds, but a lot of private equity funds that are decent and they've had crazy returns in the last couple of years, they just had one good play. That's it. They have 1-2 good plays, turn $1 million into 20, 30, 40. And, you know, they're able to do so much with that, and it gives them their track record and everything else. So, yeah. And here you go. We're stuck on the mountain now because he's getting dicked by this guy. I thought that guy was going to crash. I think it was kind of sad. I didn't want to see him crash, but, man, that was wild. Beautiful views, man. I love everything. Oh, and he's back on. I don't know. Maybe I should get off his ass. I don't want to see him crash. I'm not even on his ass. I'm just going to still go fast-ish, hang behind. Oh yeah, there's this other car. See, you'll get stuck here on the mountain anyway. So, but yeah, that's pretty much it. Like you guys can see, it's a cool thing. I encourage you guys to look up private equity if you haven't had any familiarity with it. Get interested in it. It's not too far of a shoot from the stock market, and a lot of the stuff you'll learn in private equity you can apply to investments in general. So that's the best part, and vice versa. What you learn on the stock market you can apply in the exact same way. That's the best part about it. You understand stocks going into private equity. Really all you have to do now is just know how to source companies, find them, and then, you know, do your valuation metrics to figure everything out. So yeah, that's pretty much it. Is this guy like trying to drift, or? I think he is. I think this guy thinks he's in fucking Tokyo Drift. That's wild. Oh man. Well, hopefully you guys enjoyed the view. Hopefully you guys like this style of video. No awkward looking at me. You get to see some of the, this is why I put it on there, is like you guys get to see what the fuck is this guy doing, go? Man. You get to see kind of, you know, my life, what I go through from my point of view. And that's the type of stuff that usually happens with these videos, especially in LA or random things. So I thought that was cool. You guys got to see that, my first person. And yeah, hope you guys enjoy that. Hope you guys learned something from this, and hopefully it sparks something in you guys. If you guys know anybody who needs investments for a company, any stage, let me know. Except pre-revenue, I'll consider if it's pre-revenue. It just has to be fucking hot, you know? So that's pretty much it though. I really hope this helped you guys. Hopefully you guys learned something from it. You guys kept me entertained on my drive, and I got to see that now. I've timed it. That is a 15-minute drive to get from my house to Hollywood through the mountain, and yeah, not bad. But I I love you guys. Make sure you subscribe if this helps you out. Drop a like, turn on the post notifications, and yeah, I love y'all. I'll catch you guys later. Peace.